Isaac Newton could be the smartest human ever, and he got absolutely destroyed in the tulip bubble. So it's not something that, like, if you're smart, it's avoidable, right? Like I've gotten, destroyed by my emotions, right? It's hard to deal with. And look, some of my friend told me, like, Chainlink is either the future, it's either this big winner, or it's like the biggest scam ever. And if they are a scam, well, they're a really poorly run scam, because they barely used to do any marketing. They would barely do any hype videos or anything. Like, typically scams at least try to make people buy their tokens. Chainlink would do nothing. So if it is a scam, well, it's a pretty poorly run scam.
This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. For an advertising-free version of the show, check out patreon.com/wallstreetwildlife. Hello and welcome to the latest episode of Wall Street Wildlife. As you can see, there's more than just Christoph and Luke. Today we are joined by a Chainlink expert, Daniel from Blockworks. Daniel, thanks for joining the Wall Street Wildlife podcast.
Yeah, thanks for having me.
Right on. So let me explain what's happening here. Badger and yours truly, we've been investing in the stock market, the traditional buying companies, buying shares in companies that we've done research on, and then talking about them and helping beginning investors learn about investing in the stock market. But then it so happens that my largest position in the real world is Chainlink, something called Chainlink, which is off in the weird, wild world of crypto. And I've been talking about Chainlink now on this podcast for well over a year, right? It was one of the first buys I made for our King of the Jungle portfolio. And every time I talked about it, poor Badger was giving me, squeezing my shoes, like, what the hell is this thing, right? And he's just not yet caught on, for all kinds of reasons, as to what Chainlink even is and why I'm all, excited about Chainlink's potential. So despite my having done over 4 years of some pretty deep diligence on this thing, I thought it would be really wise for us to bring in someone that knows even more than I do. And that's you, Daniel. So you have been gracious enough to join us to tell us, maybe help build the foundations of what Chainlink is, how you got involved in it, and why any investors, and not just crypto people, might consider taking a deeper look at what this thing is. So without further ado, can you introduce yourself and tell us a little bit more about your own origin story?
Yeah, absolutely. So my name's Daniel Shapiro. I'm currently a research analyst at Blockworks Research. In terms of where I came from, I studied mechanical engineering at University of Southern California, got my master's in a subset of MECI called control theory, which is computer automation of mechanical systems. So anything from self-driving cars to robotics. Worked in the aerospace industry for a couple years before I left in January of 2021 to pursue crypto investing full time. I actually first learned about crypto just by listening, to podcasts like yours. And I initially began investing in 2018 during that bubble. So I kind of came in at the wrong time, right? But stuck around and actually learned about Chainlink end of 2018, kind of beginning of 2019. And that's kind of when I first began investing in Chainlink. And yeah, the rest is history.
Can you tell us a little more about aerospace engineering? Because that's quite the leap, right? I mean, is this the way it sounds to me is like you might be the kind of guy that knows more about a company like SpaceX and Rocket Lab than anyone else, which are two favorites. And then to go to crypto, like what went?
Well, yeah, no, I actually did a co-op at SpaceX, so I was a fluid mechanics engineer there for a little bit, and I don't think that there's not really a direct tie right now. I think maybe in the future there will be, but it was more around the standpoint of, all right, I graduated college, making money. Like, where do I invest my money? And I saw in 2018, I saw Ethereum go from under $1 to $1,400, and that asymmetric return profile cannot be found in the traditional in public markets, right? And so, right, like the S&P average is about 10% a year annualized, and so that's what got me interested in crypto. Is there wasn't really a tie from aerospace. It was more of just the I guess you could say the attributes of the asset class itself. And then also around that time, there's a lot of discussion around censorship of, and how big tech companies were abusing our data. And I thought blockchain would be an interesting solution to that. So those were actually kind of the two things that got me initially interested.
Wow, cool. Are you at all invested still in SpaceX or Rocket Lab?
No. For SpaceX, to invest, you have to be a full-time employee, and you have to work for at least 1 year for any of your equity to invest.
Cool, fascinating.
Yeah, it's private.
So maybe I'll start by talking about crypto in general. And I think this is, I imagine you'll agree with me, but we'll see. I think one of the biggest problems right now is that, by my own assessment, 98% of crypto remains a circus, like a no different than casino gambling and God only knows what, right? I mean, I have a lot of crypto people on my X feed, but some of the stuff I see on there is just like still hard for me to begin to imagine, like how the majority of it is actually shit coins, right? Like, and I think this is what most people think of when they think of crypto in general. So let me backtrack and say, I think there's Bitcoin, its own thing, right? I put that in its own bucket.
Agreed.
Then there's something like Ethereum, which I consider like the computer of crypto, or the computer software of crypto. That's its own kind of bucket. Sort of like Microsoft is my own equation for Ethereum. And then there's pretty much everything else, give or take one or two maybe legitimate chains, but whatever. Basically everything else. And then at some point I discovered Chainlink, which I think is something else entirely. But my point is, and I imagine, Badger, this is where you can chime in, that even though I'm talking about the legitimacy of something like Chainlink to you over and over and over again, it's really hard to overcome the stench of 99% of whatever is out there. Daniel, can you speak to that a little bit? Is that your view too?
It's 100% my view, right? And I think the important thing to understand is that the nature of this technology is that it's completely open, right? And in that sense, it's open source, right? So anyone can look at the code, anyone can replicate it. And it's also permissionless. And what permissionless means is you don't need to get authorization to create something, right? You can just post it to the internet and it's live. And so that is kind of orthogonal to traditional markets where, to IPO, like to get, to invest in most things, you need to be an accredited investor, right? So there's a wall for you to even get into early things, and then the public can only get into large companies that IPO. Obviously, there's other ways, around that, and there's different asset classes with different rules, but generally, right, there are these kind of guidelines, right? And just by the very nature, crypto doesn't have that. And so you're going to have kind of a long tail of all these kind of low quality or literal scams, because, that's, I guess, the downside of having fully permissionless markets, right? The upside is that anyone can get involved. You're not going to get censored, right? And anything, you create, especially in this kind of new regulatory regime that's coming in, like, you're not going to get put in jail. Like, those are unstoppable applications. And so it's kind of this double-edged sword dynamic. And you do kind of have to wade through the scammy stuff to get to the real stuff. But just because the scammy stuff exists, that shouldn't detract from, right, the quality stuff that I believe is going to, really change society.
And I wonder if we can use that as a lens into, like, what the hell is Chainlink? So, like, at the moment, for the last year, I've taken Christoph's word for it that it's not like a Hawk Tuah coin, right? And I've even taken his word to the point that I bought like a couple of $1,000 of Chainlink a few weeks ago. So maybe for the next couple of minutes, Daniel, you can help me understand what the hell it is I've bought. What is Chainlink, and why is it not a circus coin?
Actually, I'm sorry, Daniel, before you answer that question, one quick sort of maybe foundational layer, and then we get to Chainlink. Correct me if I'm wrong, but you use the word blockchain technology earlier, right? To me, that's sort of the understanding that is kind of the base layer for everything else that follows. Like an investor in any other company needs to understand what it is that the company is selling, sort of, right? So can you speak first to blockchains in general as a technology and why they're so interesting, and then
Well, you know what? Actually, let me reframe this a little, and this will be worth it because this will tie into Chainlink. But I think even underneath blockchain, you have this new category called consensus computing, right? And blockchains are like the primary application of consensus computing. Chainlink, which is an Oracle network, right, is another example of consensus computing. But what consensus computing is right, running computations where you have a lot of independent parties that are all running the same computation, and then they all have to agree on an output before that singular output is produced, right? And so in terms of blockchains, you have a group of what's called validators, right, that are all validating smart contracts, which is essentially just you could say blocks of code that are running in whatever native virtual computer of that blockchain environment. And you have all those validators that are running people's transactions or computations that they want to perform, like taking out a loan on a certain application, or sending a meme coin to someone else, right? And for those transactions to actually happen and be permanently recorded on the blockchain's ledger, you have to have a group of validators all agree on what actually happened, right? And so that process of generating consensus is what actually provides blockchains with all these properties that we like, right? They're permissionless, they're transparent, they're censorship resistant. And so I think the framing of consensus computing is it's valuable to start from there, because as I'm going to discuss, that's going to tie into Chainlink.
Yeah, I think the implied big question is, why is that such a big deal?
Yeah, so I think on its own, there are a lot of positive externalities or positives of blockchains that are better than centralized systems. But they're also slower. They're harder to build. They require more energy and people and resources to run. really why consensus computing and blockchains and oracle networks, why these things are valuable is because we exist in a world where there is corruption, there is fraud. You can be censored, right? And, obviously, like we live in America. We live in, probably the best of the worst systems, but, even here, we know that we live in a system where, right, if you don't invest your money due to a 2% target inflation rate, you lose half your wealth in 35 years if you don't invest it, right? So something like Bitcoin, which is censorship resistant, non-state controlled money, that might be a good investment because the US government is running massive fiscal deficits, right? So really the short term, to me, I see that the biggest short term benefit is you have this backdrop, right, of potentially secular inflation, increasing global tensions, and a multipolar world. And I think that backdrop is what gives them their immediate value. In the long term, I think the digitalization of essentially the entire global financial infrastructure and supply chains and ERP systems and other infrastructures, I think that'll lend itself to a world kind of powered by artificial intelligence and digitalization. But that's further away. That's decades away.
Okay, thank you. Yeah, that's really useful. I mean, it's key to understand that in some ways, to me, what's appealing is that this is also like a philosophical kind of existential type of technology and invention, which speaks to core values that people have and like what is even money, right? So we're talking about the biggest of biggest issues. That's why so many intelligent and educated people have devoted so much of their lives to understanding this space. So anyhow, okay, so those are our foundations. So now to get back to Badger's question, what the hell does he even own when he purchased
Yeah.
Chainlink?
So Chainlink is a framework for creating decentralized oracle networks. Or they're called DONs, DONs, and oracle networks are similar to blockchains in that you have a group of what's called node operators that are all coming to consensus on certain things, right? But instead of coming to consensus on a list of transactions, oracle networks can come to consensus on anything, right? So for instance, the price of a stock, the weather at a certain location, right? They could verify the amount of reserves in a company's bank account or a fund's bank account, right? An oracle network is, right, whereas a blockchain purely comes as consensus on transactions, right, on who's moving what tokens to who. You can think of an oracle network you can think of Chainlink as a generalized framework for creating consensus on anything. And so it's really, it's completely synergistic with blockchains. They need each other to create useful applications. And I'd say the final thing to know is that Chainlink is blockchain agnostic. So Chainlink is partnered, with dozens of different blockchains. It can work with any blockchain, and they simply provide these other, you could call them trust minimized, inputs to blockchains so that developers can build useful applications. Because blockchains are inherently closed environments. The reason why they're so secure is because they don't know anything about the outside world. But if you don't know anything about the outside world, then you can't make anything useful. All you can do is just make meme coins and send them to each other, right? Bitcoin was the first blockchain because it's just money, right? It's this mimetic idea that, it doesn't do anything other than just existing, right? And people agreeing that it's valuable. But when you want to start, making a lending application, right, you need to know the price of all the things people are lending and borrowing. That's where Chainlink comes in, right? You could have Chainlink Oracle networks create price feeds that you can combine, with like the Ethereum blockchain to make a lending application. And so once again, completely synergistic technologies. And Chainlink has a lot of different services, but I think maybe we just start off there with kind of its general framing, if that makes sense.
So the big deal here is it's kind of like bridging the crypto world, like the online world, to real physical things. And I can see how, like, there's some physical truths that are unarguable, like the weather in a particular location. But actually, maybe that is a good example. Like, how does the network verify that a fact is really true? And presumably, like, it's consensus of lots of people confirming that thing. But fraud and things happen in the real world. So if you can give us like an example of a kind of real world physical thing that is being used, where Chainlink is sort of bringing that information into the crypto world, and how that reliability can be, how it gets there.
Exactly. So, and let's just start off with that use case, right? So like weather data. As we discussed, the Chainlink network, it's composed of all these individual decentralized Oracle networks, and then each of those Oracle networks is composed of individual node operators. So in the case of weather data, which could be really useful for certain farmers' insurance contracts, right? There's 500 million farmers in the world that don't live in a country where they have a local government that can support a legal system and a banking system so that they can buy insurance. If it doesn't rain for 2 years in a row, they have to uproot their entire family and become a migrant worker, immigrant somewhere. But right, with a $50 Android smartphone and an internet connection from maybe Starlink, you can buy weather insurance over the Ethereum blockchain, right? And there's an app called Arbol that does this. But so how Chainlink fits in, right, is Arbol, right? They need that consensus or that trust minimized weather data. So Chainlink has a few node operators. One of them is I don't know if it's NASA themselves, right? But they have node operators that pull weather data from NASA, from various like weather forecast websites. There's probably 3 to 5 of these. I don't know the exact names of them. And so, right, you have, because obviously it's tough to get satellites up into the atmosphere. So there's not going to be a whole list of these types of companies, but they pull 3 to 5 sources from the satellite data. And then it goes into multiple layers of aggregation with these Oracle networks, where the reason why you know that data is good is because each node operator needs to put up collateral against kind of their commitment, right? So let's say, I'm pulling my weather data from this NASA API, and I say, all right, at this location, whatever, here in California, it rained at this time or it didn't. And let's say I say it rained, right? If more than 50% of all other participants also said it rained, then right, consensus was achieved, and that single output is generated, and all the node operators, they make money from doing that correctly, right? If you don't answer correctly, right, or let's say your system fails, it goes down, or you say, no, it didn't rain because you were trying to game this contract and you went against the majority, your collateral that you had to put up to participate in the first place, it gets slashed, so you lose money. So there's this kind of economic, there's this mechanism, right, where the more decentralized a network is, let's say you have 50 nodes or 100 nodes, which is possible for some of these, financial ones where you have something like price data, right? Like, what is the price of Amazon at this time, right? It becomes really hard to go against the majority because everyone knows that, you're not going to be able to convince the majority to all lie at the same time, to all act maliciously together. And so that creates this incentive mechanism for everyone to tell the truth, which generates that reliability. And so, depending on the size of the contract in play, Chainlink might require it to have, more node operators, and they have to put up more money in collateral. And there's actually a formula you can use to calculate how many node operators, how much collateral do you need, so that the amount to bribe the network is greater than the amount of reward that you would get from winning that contract and acting maliciously. So kind of dense there, but does that make sense?
Yeah, it does. I can see that for like something that's like broadly verifiable. Like if consensus is that it rained in Austin yesterday, and I could actually go and I could go and check that myself, and I could convince myself that was the case. But what if it was something? What if it was a piece of data that's offline that is actually quite private? Like maybe you mentioned reserves. Like maybe it's the gold that a particular institution has in its vault, something like that. So, like, not anybody can walk in there and actually look at the gold bars and count them. So, how would something like that end up being on-chain verified information?
Yeah. So for an instance like that, that like it inherently, you're not going to have a lot of node operators that have access to do that. And so I think currently for some of their proof of reserve networks, it's actually just like one or two node operators that have, the authority to check those reserves. And so it's not that decentralized. I think in the future, I think that for something like that, we actually need regulatory clarity to have more kind of authorized node operators that can come in and I guess verify those reserves, right? And one of the benefits of Chainlink 2 is that they're currently like they're still relatively early, right? But what's interesting about Chainlink system as opposed to something like Ethereum's or other blockchains is every node operator is public in the sense that their entire history of every job they do is permanently recorded and posted on chain. And so Chainlink's goal is to create what they're calling this node marketplace, right? Where you can filter by by data type, right? Performance history, the amount of collateral that they have, to put up. And I think that by kind of publicizing the node operators, you also introduce this other element of reputation, right? And your ability to profit in the future is only as good as your reputation, right? And so I think for stuff like that, proof of reserves, where like if you have one person that's verifying the reserves of something, that's not decentralized, that's no good, right? Because that one person is bribed, whatever, right? So I think we're still early on for a solution like that. I do think that there's solutions, right? Especially once you have, like public companies that's all they do and they have this reputation. And if they ever, acted maliciously, everyone would know, they get removed from the network and we'd move on. In terms of other types of data that there's not a lot of, let's say that you can't verify with a lot of people, it's kind of fuzzy. That's pretty tough. Something that Chainlink and actually has a product for is they can take the output of multiple LLMs. So like, a ChatGPT output, an Anthropic Claude output, a Google Gemini output, and actually combine what all of the chatbots say to try to remove hallucinations and come to some sense of truth. So I guess, converting the physical world into this kind of 100% guaranteed digital form, right? The physical world's fuzzy and it's not always possible. It's not always achievable. But I think for a large amount of the use cases, which are financial, which really revolve around things like price data, I think that it's very, very viable. And that alone has a massive market size, right? Like, as we know, the global financial system has hundreds of trillions of dollars of assets. And like financial stocks make up a significant portion of the stock market.
Yeah, Daniel, that's such a great point. This is correct. Disabuse me of any naive notions I have, but one of the earliest things that got me super excited about Chainlink is my own personal history, having lived through the great financial crisis of 2008 as an investor. And I thought, like at that point, I kind of thought, well, to the extreme, the whole capitalist system is is a fraud because you privatize gains and you socialize losses, right? I mean, that whole thing. But then I thought to myself, is there any, in human nature is greedy, that whether it's government that's greedy or individuals that greedy, over time, things get corrupted, like you said. So when I think of any bank, I always am left wondering, do I really know? Like, can I ever really know what's truly in that black box, no matter what the CEO say or no matter what the government says? Is there any solution whatsoever to that kind of debacle? And I thought, yeah, blockchain stuff and Bitcoin stuff is an alternative universe where we could know more, at least more. Can you speak to that? Is that like I'm not looking for perfection either, but is that also your view of why crypto is such an interesting space, because it solves that problem of unknowability of what's truly behind a bank's ledger?
Yeah, absolutely right. Blockchains force transparency, and so every asset, right, which is a token, every asset on a blockchain is you can verify where that asset sits and who holds it, right? Obviously, there's anonymity in the sense that you see just a wallet hash, right? Like, oh, this random string of numbers holds these assets. You don't know who that is, but every asset is verifiable in real time. And so, for instance, for Ethereum, if you want to just do a little digging, you can go to somewhere called Etherscan, and you can literally look around the blockchain, right? You can look at all the transactions that are taking place in real time. You can see who holds what assets. And so it does force that transparency. And I actually think that that type of transparency would have prevented or at least minimized the impact of something like '08, because in '08, people were leveraging, in many instances, not correlated assets, but literally the same assets, right? And the system was so opaque that they didn't even realize that. And so I do think that blockchain solved that. And actually, I think that banks and kind of asset managers, central security depositories, and other financial market infrastructures are moving in this direction. The problem, though, is that, right, everyone wants to make their own blockchain, right? Because blockchains, they can charge fees, they make a lot of money, and so everyone wants, to make their own. But the problem is they can't really talk to each other, right? And so if you're someone like BlackRock and you have $10 trillion worth of assets that people want to buy, right? Like you literally are holding, you have a very valuable portfolio. They don't want to go put all their assets on Ethereum and make all the Ethereum validators rich getting to sell their assets, right? So if you're BlackRock, right, really the value proposition of a blockchain is, why do people want to come to you? Like, what apps do you have? What can you buy? And so I think that these banks, I think they do want to, quote unquote, tokenize their assets, put them on a blockchain. And, that solves transparency. It makes them very auditable. It gives them something called T+0 atomic settlement. So instead of having to wait days for a wire transfer, you get your money instantly. Coming out of '08, there's rules and regulations, Dodd-Frank Act, that actually make it so, all these banks, I think like 1% to 2% of their assets are effectively latent at any point in time. They just need to sit there to, quote unquote, grease the wheels. That's trillions of dollars that could be earning, 5% in bonds, or just, tossed into the overnight repo. So going to a blockchain-based system, you're getting so much operational efficiency, and these banks are going to make a lot more money. It's a no-brainer, right? The problem is everyone's going to be on these different systems, and how do they talk to each other? And actually, Chainlink is creating a solution to solve that, and maybe we could dive into that next, if that answers your question.
Yeah, actually, that's perfect, Daniel. So let's zoom out for a second, because I hope our listeners are still. Maybe you could some of you could re-listen to this, because there's a lot here, right? But I think we're progressing nicely. So if I zoom us back out to my own personal journey with Chainlink, I started in 2021. So I bought at the peak, right? Of course. But I was already excited enough by just the first part of Chainlink's value proposition, the DONs, the decentralized Oracle networks, because it makes sense to me. Like, if blockchain is this really important technology that we've discussed, it does remain sequestered from the real world. So the winner, this is how I was thinking about it, the winner that could provide the sort of standard for communicating the real world to blockchain. And I thought in my mind there could only be one, just like there could only be one internet, right? you don't have multiple internets. The whole definition of the internet is there's only one, right? So if Chainlink could become the standard via which blockchains communicate with the real world, that's enough for my money, right? That's enough of an investment case to say, if, right, capital IF, if that works, holy cow, I'm going to be rich. Now that's in 2021. Fast forward, let's say the last 2-3 years, right? And all of a sudden, Daniel, what you were talking about is as much the issue as simply creating Oracle networks, meaning all of a sudden we realize that there are multiple blockchains, each with their own fancy technology. This one does this a little better. This one does this a little better, right? Speed versus efficiency versus all kinds of technical developments I don't even know about or understand. But more importantly, there's the kind of commercial blockchains, and then what you talked about, banks wanting their own private blockchains, right? Why do I want to mess with these other guys? I want to do things my way.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA-registered SIPC-insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
So we're all of a sudden in the world in 2023, 2024, where banks are saying, each bank is basically potentially having, creating their own system. So you have something like in the thousands, tens of thousands of blockchains, each their own private little island. How can you possibly work in the financial world, right, with all these separate little islands? So what does Chainlink do? It creates something known as CCIP. Daniel?
Yes, so CCIP is their cross-chain interoperability protocol. And to just to explain it first, it is a protocol to send messages and tokens between different blockchains or off-chain systems. So it's really a communication protocol, like what you said, HTTP. But before I go into it, I think, right, it's important to describe kind of this relationship between CCIP and something like Chainlink's DONs, their price feeds, right? Their price feeds, it's just moving information from, it's taking information A, which happens to be a price. It's coming to this kind of, tamper-proof, secure, censorship-resistant consensus in the middle, and then it's moving this information somewhere else, right? That's all CCIP is, except instead of doing price data, it's taking, the state of some, blockchain system or off-chain system, right? Instead of what is the price, it's, what tokens do I have? What are the state of these tokens? Now I have to move them, right? Really, you're just taking information from location A, you're coming to consensus on it in the middle so that everyone knows that it's secure, right? Because you have all that slashing mechanisms and all that agreement, right, built into it, and then sending it over here, right? And so CCIP was a very natural extension of Chainlink's other services, and everything that Chainlink built between 2017 and 2021, 2022, all that technology was to a degree, you could say, fungible with CCIP, right? You're just moving some type of information from point A to point B. And so CCIP is really, it's more than just a token bridge. It's also a messaging protocol. And that's so valuable because you could think of it as almost like, right, HTTP is for information, but really you're just copying information from place A to place B. CCIP is value transfer, right? So it's information kind of with this value attached to it, and with that, right, that kind of, from just like a step, taking a step back, that really unlocks an entire new universe of just, ideas and technological innovation in general. But kind of getting a little more in terms of what CCIP actually does, kind of has two aspects to it, right? One, it connects blockchains to each other. So if you're on if you're on Ethereum, but this new meme coin launched on Solana, and you want to go to Solana and you want to trade that meme coin, you can safely and securely send your tokens over, right? If you're an application and let's say you're like Uniswap, obviously Uniswap doesn't do this, but let's say you're like a decentralized exchange, right? And you want people to be able to trade on your exchange regardless of whatever blockchain they're on, right? That application could integrate CCIP to connect on the back end to all these different blockchains, so that the end user can just log on to that single application, and they don't even know what blockchain they're using, right? They just know they're using this application, and CCIP kind of abstracts away all that cross-chain complexity in the background. So that's kind of what it does on the blockchain kind of native side. The other component of CCIP, which I think is actually in the short term, it's way more important. In the long term, probably less important. But CCIP actually connects traditional financial market infrastructures to blockchains. And they do this through their partnership with SWIFT. So SWIFT is the Society for Worldwide Interbank Financial Telecommunication. And it's kind of the infrastructure that underpins the current global financial system that came out of the digitization of the industry, right? So I think they were founded in like 71. They maybe went live in like 1977. But what banks said is, all right, if we can all talk to each other on the internet now, right? Like, how do we do that in a secure way, right? How do we do that in a fair way? And what every bank in the world realized, right? SWIFT is composed of around 12,000 banks that service more than 99% of all humans that have access to banks. So, right, essentially, they're the global system, right? They're the system that Biden turned off Russia's access to it at the in 2022 at the launch of the Ukraine war, and cut off their access to $330 billion, right? Like, this is the global system. What all these banks realized, right, is, all right, whoever controlled the messaging system would essentially you'd control the world, right? You would control the flow of money. And that's kind of everything. And so what they all realize is, all right, we actually have to kind of work together here, right? The game theory said, if you don't work together, no one gets this digital system and none of us grow rapidly. If we do work together, no one has that advantage over anyone in particular, but we all get to grow a lot. And so really, SWIFT was the first DAO, right? They're this, decentralized organization, and they've had a monopoly on interbank messaging to today, because you kind of need this messaging system, right? And so Chainlink, I'm not super sure how the partnership started. It did start in 2016, but the SWIFT system currently, right, it's how all these banks send message to each other. What Chainlink built with them is now, right, there are hundreds of thousands of employees can, on their existing systems, just go to send message, right? And now in a drop-down menu, you select CCIP, and now all these banks can send transactions and do economic activity on any blockchain that Chainlink is connected to. And so, or other banks. And so what this does is this opens the doors for all these banks and traditional financial market entities to tokenize their assets, and not only exchange those between each other, but also exchange them or utilize them within blockchain applications. And so I think that we're very early here, but right, this is potentially the beginning of a kind of unified, kind of global blockchain-based system, and Chainlink has the potential to be at kind of the heart of it.
Let me jump in for a second. I can talk to this, right? Because before I was a professional investor, I worked for a bank. I used to run global payment programs for one of the world's biggest banks, and I've run like programs across thousands and thousands of different payment systems. Like I know this space pretty well, and this is actually what got me excited about Chainlink. So I didn't go and buy a couple of $1,000 just for fun. I did a little bit of research. It was the interoperability with SWIFT, because like the Swift standard, as you said, has been out for decades. Swift know that banks are incredibly complicated, incredibly regulated organizations, and they're very, very slow to change. And so, like the Swift standard has only really changed, I think, like 3 times in 40 or 50 years, because like it took the bank I used to work for 4 or 5 years just to prepare for the most recent Swift standard, ISO 20022. And so, and they've just made that transition. That only came in like a couple of years ago. So if banks want to become like interoperable with modern blockchain technology, they've got 2 choices. They either have to build it in-house, and it's like going to be nigh impossible for a massive global bank to do that in a consistent way and get that working with every other bank's different implementation of it, or they just talk the same language they talk now, which is Swift. And Chainlink has now seemingly become one of the bridges from the same language essentially that all the banks talk, and now they can start doing like blockchainy stuff. They can send payments in Bitcoin or Solana or any other cryptocurrency, or talk to each other, and all they have to do is they just talk the language they already know. They talk Swift, and Chainlink essentially becomes like this translation at each end. So that is quite exciting.
Right. And in fact, I think the big summary for this part of our discussion is, to me, the most obvious one. Chainlink, that's the name of the thing. In fact, it's sort of like, it's what you said, Daniel. They started working on this close to 8 years ago. And it was all behind the scenes, and no one, knew whether it was going to be true or not, because it seems like too good to be true kind of thing. But the name of our protocol is that which connects all of the chains to one another, including the world's global financial system. That's kind of like the big case, I think, most reductive bull thesis I could make for why you might want to invest in this thing.
100%. And I mean, that you explained it as good as I could. To kind of give another spin on it, without going too into the weeds. The way that a company can make money, right, is, or the reason why something has value, there's really two ways, right? One is through economy of scale. So for something like an automotive company or an aerospace company, or if you're Apple, right, if you can just make something cheaper than others, you're going to have an advantage, right? And there's physical conservation laws at play, right? Like China, Apple outsources all their manufacturing to China, where labor is cheaper and they have the most money to get the most complex supply chains and the cheapest parts, right? So it's really hard to compete with them. The other way, right, let's look at something like Instagram. If I wanted to, I could hop on, my most recent, coding app, I hop on cursor.ai, and I could probably code up an Instagram clone in a day, right? Wouldn't be quite as clean, but you give me a day, you give me a week, I could get something pretty close to it. But why would I never be able to compete against Instagram? Because they have all the people, right? They have the network effect. And so in their case, it's software. There's not this kind of there's not this physical barrier to competing. It's a pure network effect based moat. And so what we're learning is blockchains, it's really easy and really cheap to make your own blockchain, right? And every year it gets cheaper and easier. And as we discussed, there's all these asset managers, right? The traditional financial system, there's $870 trillion worth of assets that they hold. And blockchain, I think, is around like 2, right? I mean, it's been going up recently, so I don't know the exact number, but it's tiny, right? This traditional world, they have all the assets. They have everything that people want to buy. And so if the cost to make a blockchain and launch it's going down, and we're learning that their moat isn't quite as strong as you would think it is. But look at Swift's moat. Swift is the standard, right? Because fundamentally, to play the game of life or to send money to people, you need to be on the same language. And so Chainlink, they were actually, they're initially called smartcontract.com, and, they were working on building something kind of like Ethereum back in 2012, 2013, before Ethereum existed. But for some reason, they uniquely saw the Oracle problem before other people, and they pivoted to making this Oracle network. And so the foresight there is absolutely incredible to me. But then, right, the reason why something like Chainlink might be valuable is because whoever creates the winning interoperability standard, right, the network effect there will be insurmountable. And so you will have a moat. And a moat means cash flows, right? And obviously, the crypto space doesn't trade on cash flows right now. But, where the value proposition really of CCIP is, there's actually a moat here. And you can't say that about 99% of other legit crypto applications, in my opinion. And, it's right, there's all this 99% of scam stuff, and you see all these fake partnership announcements. And so it's kind of hard to, give Chainlink credit, or to maybe, believe in them and these partnerships with Swift and stuff. But if it is true, the value of Chainlink is probably a lot higher than it is today. But I think, interoperability is interesting because it will be winner take all, and there is a moat there. And so I think it's important to keep that in mind as well.
There's an aspect to this, Daniel, as I get myself all bulled up again. Not that that's ever been a problem for me, is that when I first started seriously looking into this, I came across the pitch for Chainlink as, imagine you could invest in the internet itself as a protocol. And I thought, sure, like, my God, instead of just investing in Amazon or Google, just invest in the thing that makes all of it possible. And I kind of thought that yes, that's amazing if true, but it also seems like too good to be true, like too much, like too like how could that be? How could that even be? But disabuse me from my kind of hopium, the hopium I'm addicted to. But to some non-zero extent, that kind of is sort of what Chainlink is trying to do. Am I wrong? Like, become the standard.
Exactly, right. And I don't know all the, I can't predict every use case, right, in 10, 20, 30 years, because you can't. But really, the way I think about it is the world is going digital, right? And I think that within 5 years, you're going to have a bunch of AI agents. There's probably going to be more AI agents, doing things on the internet than humans, right? And they're all going to exist in this digital domain. And the problem with the current internet, right, is when you send information from point A to point B, you're not actually sending that information, you're copy and pasting it, right? And so the conservation laws that we have in the physical world that kind of, enable our system and, the whole system of private property rights and ownership, right, that exists because of these physical constraints, but those don't exist digitally. And so I think if, right, HTTP is for, information transfer, CCIP could become, right, the standard protocol for value transfer, right? And, they're starting off with just kind of, let's hit finance, right? Let's kind of modernize finance, something that they've wanted to do for decades, but they haven't been able to. I think that, the applications are, there's so many more, right? From supply chain, parametric insurance, different, various like AI system interaction and consensus around that. Like, I think if you just say internet of value or, value transmission, I think that, right, that I do think that frames it well. It's kind of, it's not super clear, but to your point, it's like, yeah, like this thing is probably, it's either a lot bigger than we think or it's nothing. But kind of tying it back into the very beginning, right, there's an asymmetrical return payoff here, right? And it's either going to zero or it's going a lot higher. And so you don't need to bet the farm on it, but, let's just run the math, right? Like if this thing if it has a, 10% chance to succeed, but, maybe it could 10x, that's still you double your money, right? Like the payoff, even if you give it kind of extreme odds like that, is still, it rivals or might be better than like traditional stocks, right? I actually think that the return profile is a lot more asymmetric than that. But yeah, I mean, I think that's at least how I personally think about it, right? And you never want to bet the farm on something like this, but it's, I don't know. That's why I'm
This
interested
is
in
music
it.
to my ears, Daniel, because Christoph has bet the farm on Chainlink and possibly his wife's farm as well. I think he's opened accounts in her name, is that right? And we had a conversation just a couple of weeks ago where he basically talked about the same thing you just did. Like, what's the chance of it 10xing? And his percentage was way higher than 1 in 10. I won't embarrass him by reminding him about how
49. I put 49% just to be humble.
I wonder if you could help us better, maybe help Christoph better understand like the downside risks. How does this thing fail?
Yeah, so I think in terms of how it fails, I think, and this is just strictly just going off, right, like publicly available data, right? Like I think Chainlink has been very focused on the traditional financial system side, right, like connecting global TradFi, and so they have fallen behind. Well, all right, their lead in terms of like blockchain native stuff has come down a little bit, right? They're still the dominant network for price feeds, and that's quite significant. But there's also a lot of quote unquote token bridges or interoperability protocols that have launched and that do way more volume than Chainlink CCIP, right? Because they're connecting all these different blockchains together that Chainlink didn't rush to connect. And maybe they have strong partnerships with some of the leading blockchains like a Solana. And so Chainlink is definitely far, in terms of just the numbers, they're far behind on the blockchain to blockchain side. Right now, price feeds, they're still kind of dominant. So their focus elsewhere has led to a little bit of a loss there, and maybe that could keep going. In terms of the TradFi side, right? Like there might be a scenario where these, all these like this CCIP fails. Maybe there's all these banks create their own blockchain, network, and it's permissioned, and they just all decide that they're going to build on the same one. Maybe they all just move directly to public chains right away. We have seen like BlackRock launch like a tokenized treasury fund on Ethereum. It's relatively small. I don't know how they do that with stocks or other types of assets, but maybe that gets passed over. I think those are probably the.
Okay, that's cool. So essentially, they're not the only game in town.
Yeah, correct. They're not the only game in town for price feeds or for cross-chain interoperability, but they are the only game in town for that like kind of traditional finance. They're the only one partnered with Swift, right? So I think that's the thought process there.
Yeah, like it caught my eye. Their founder had like a presentation at Cybos, which is like the big financial industry conference of the year. So like it's quite significant just seeing them having like a setup and a booth there.
Yeah, they're the only one. So yeah, no, I think for the average investor, I think the risks exist, more around the cyclical nature of crypto, the volatility, controlling your emotions. In terms of the Chainlink thesis, there's not, I think I'm still on maybe like a 1 to 3 year time horizon before the thesis gets invalidated, because we still are so early and none of the TradFi CCIP products have even gone live yet. They've just been talking about them. We're supposed to see some go live next year, right? So they're telling us that. So really over the next year or two, if it doesn't come to fruition, then it's like, all right, I'm going to really start questioning this thesis. But I don't think we're close to invalidation yet. And that's kind of my time horizon. But then, I think for the average investor, right, you also have these kind of cyclical, 4-year historical cycles where the price could go up a lot and drop 90% and just due to market dynamics. And so I think that's something, that's the other thing that if I was an investor, I'd be worried about. In terms of 2025, I would expect the cycle to probably end sometime in 2025 or 2026, right? We are kind of nearing late cycle. I'd say we're in about the 7th inning, middle of the 7th inning, maybe bottom of the 7th inning. And if you do buy now, if you do hit a 2x, I would take your principal out and I would expect to, at least sell a good portion sometime in 2025. I do think we're quite late cycle.
All right. So can we take a step back? Because I think there's another important piece that we haven't addressed yet. So I'm sorry, we got ahead into the investing portion, but there's another fundamental piece to Chainlink, which, Daniel, I hope we could address. And to peel back the curtain a little bit, we were trying to have this conversation a couple months ago, but in the crypto financial world, there's these big conferences. And one of the latest ones happened in Hong Kong. And then there was more stuff from the Middle East just last week. But from my understanding, Chainlink dropped another huge developmental piece onto the world, which from some corners are calling it the biggest thing yet. And that's called, for short, CRE, Chainlink Runtime Environment, which here's the principle. Here's my understanding, and Daniel, help me flesh it out. As an investor, I follow the principle of go where the developers are going, because in my mind, developers are the people. Developers, to me, suggest the people who are creating code, building the next thing, iterating, and that's where the money is going to flow. So something like Snowflake is a common example of, fanciest tech in terms of coding. Go there, follow that. So Chainlink releases something called CRE, and the developers are going cuckoo bananas and are saying that this might actually be the coup de grace for Chainlink. Daniel, can you speak to that a little bit and your reaction to this announcement? So what it is and like how you thought of it when you heard about it? How's this play into the thesis?
Yeah, so it is absolutely massive, as you said. And I know as Chainlink bulls, we say it's, whenever they make an announcement, we tend to say it's massive, but I think this one, it definitely fits the bill. The way I think about it is I would analogize it to when I think about it, I think about, the Ethereum virtual machine, right? So blockchains consist of a single set of validators that are all processing the same transactions and coming to consensus on one thing, right? And so on top of that, you can very easily build a virtual machine where you can actually have developers write code and create programs, and everything is just going through those single set of validators. And so, it's an easier problem to solve, right? So like Ethereum is called the Ethereum virtual machine, for instance, right? And their coding language is Solidity, and any code that you write in this virtual machine, all the validators will execute, right? And so that application is indeed following the rules of that blockchain. But as we discussed earlier, Chainlink it's not a blockchain, right? It is this framework, it is this network of networks of thousands of individual decentralized Oracle networks, right? All with different consensus mechanisms, all or ways of aggregation, or different rules, different attributes, right? Like every Oracle network is individualized and optimized for whatever particular set of data or computations that it's designed to do, right? And so it's really hard to build a single kind of sandbox environment over all of this, because they're all different. And so historically, applications would come to Chainlink and they'd say, hey, we need this data, we need this weather data, we need this price data, right? We need you to compute random numbers for us. We need you to automate some different services or functions of our smart contracts, right? And Chainlink would build these kind of ad hoc solutions for all these teams. What CRE is, it is a single homogeneous computing environment, similar to something like the Ethereum virtual machine, where developers can come in and through all these pre-built plug and play APIs, they can seamlessly combine a infinite number, theoretically, of Chainlink Oracle networks together. So now, instead of Chainlink having to build all these individual solutions, developers are free to just come in and build whatever they want and combine whatever they want and create different workflows. And other developers can go, oh, someone already built this workflow, I don't need to rebuild it, right? And pull it. And Chainlink system kind of abstracts away all that stuff in the back end, and you as the developer just have a very simple environment to build whatever you want. And so yeah, right. Developers, right? Like they're the thing that matter. They're just going to create the applications that generate all the fees for the network, and this kind of creates now like this permissionless environment where we're probably going to start seeing applications accelerate, and I think that's super exciting and definitely like a big step in terms of moving a lot of these things into production, because supposedly this is what a lot of the TradFi customers were requesting.
So, right, maybe tell me what you think of this analogy, Daniel. Back when Luke and I were doing deep dives in NVIDIA before the major exponential liftoff, what got me most excited about NVIDIA was not so much the chips, though obviously, but the software programming language CUDA that kind of locked people into that ecosystem, right? And now NVIDIA kind of has this monopoly for all kinds of reasons. I'm wishing that this is sort of what Chainlink has done with CRE as an analogy, that they've locked down seemingly the network, they have this network lead, which could be a moat. But then if they also lock in all the developers, that's the NVIDIA chip plus CUDA scenario. What do you think of that?
I'm not super familiar with the CUDA one, but I do think that, right, I agree. It makes sense, right? Because if CCIP is like the fundamental moat, right? If you have CRE now, why would you go somewhere else to get price data, or why would you go somewhere else to generate a random number or whatever, if you can just in one line of code access that in the CRE, right? If you can pull in data, like, so I think that the ease of the CRE is going to allow Chainlink to launch new services and actually take away market share from other applications or other sectors of blockchain applications. Because, well, if you're already building in the CRE, why not just use Chainlink solution for X? And I think that, right, like building a modern application, the vast majority of the code is actually off-chain code, right? So let's say you build a cross-chain application, there will be let's say you want it to connect to Ethereum, Solana, Avalanche, whatever, some other blockchains. You will have to build, write some code, some Ethereum code, Solana, Avalanche, right, at each of those locations. But the majority of your application's code base is probably consisting of, all the off-chain, calculations, price feeds, aggregations, all that. That's probably the majority of your code base, right? And so I think over time, as applications get more advanced, and if the dominant amount of your code base is off-chain, then I think that CRE, right, and Chainlink, that might actually be where developers start, right? Historically, developers go, I'm going to build on Ethereum. I'm going to build on Solana, right? I think the future is I'm going to build on Chainlink first, and then in one click, I can just deploy to any chain I want to, right? And so I do think that you have lock-in from that instance, right? And the exciting thing is, you can start tacking on services. Like, what if one of the services was a blockchain itself, right? I think that there's nothing about that right now, but a blockchain is just a database, right, with timestamps, and databases aren't that expensive. Why couldn't you theoretically just add a DON to connect to some database in the CRE, and maybe you don't even need to connect to a certain blockchain? Like, I think that it opens up the door for a lot of interesting new things. And if Chainlink does become the standard, right? Like, look at something like Microsoft, right? They package all these tools into like Microsoft Office or into some service. And I mean, I know they've gotten sued a lot for these types of like packaging practices. I don't know if you're familiar with this, if you control the main thing people want, then you can probably, tack on some other services too. So yeah, I think that the analogy is probably very relevant.
In my conversations over the last 2 years with Luke, he's expressed some skepticism about, I guess for sure, are known as RWAs, real world assets, or the tokenization of. Just to give people a little glimpse of what I'm talking about, Chainlink Labs itself posted several times a GIF of what you see on the GIF. If you click on it, is like a house. Imagine you have a house and you're trying to sell it. We know the analog way of doing it, right? It's this awful process that involves 50,000 middlemen taking massive percentages of money for themselves, and it's horrific. I break out in hives just thinking about like going down to the title office and whatever, right? So Chainlink posts a GIF of a house, and then you see the date of your house, its value recorded numerically, and as time goes on, you add something to the house, it gets added to the call it your house's data stream, and then you could see how much the house sold for this date and that date, right? And ultimately, the GIF ends with like your house being represented as a tokenized asset that, according to this ad, you could sort of theoretically swap as easily as selling, anything else digitally, right? You put your house on sale on the chain, somebody just like buys it, right? Somewhere else. I know that sounds sci-fi and we're not even close to being there yet, but I think, Badger, you expressed deep concern or skepticism about that vision. Can we talk about that a little bit?
Yeah, let me add to that a little bit. Like, I entirely believe it's possible to do this stuff. It's not a technological question, but for me, it's a philosophical question. And the house is a really good example. Like, people lose their cryptocurrency. Shit happens, right? And at the moment, like, it is actually possible in the UK. I don't know about in the US. It is possible. I've subscribed to like the central organization, and if ever there's a change to like the title of any of the properties I own, like I get an email and I get alerted, and I'm monitoring like my parents' houses and things like that. And it has happened historically. It's very rare that someone has essentially stolen like a property because they've just filed like fraudulent papers. And it's kind of the equivalent of like maybe stealing someone's private keys or, executing some kind of crypto scam. Now, philosophically, in the real world, you have a whole system of courts and law, and you have like a recourse. You have somewhere to go. There's a central authority. And if you can prove to beyond a shadow of a doubt that this was a fraudulent transaction, well, that central authority can just reverse it and you don't get evicted from your house. But in a pure math, like crypto world with no central authority, there is no recourse. So I suppose like not so much the technological question, but the philosophical question, are there some things that actually it's beneficial to have a central authority and that you shouldn't try and put on a blockchain? Maybe is that the crux of it, Christoph?
Yeah, right. Like Chainlink is advertising a future in which you could sell a house as an NFT versus your concern that, well, sure, but,
I definitely think that there are a lot of use cases where something like Chainlink wouldn't make sense, right? And, for example, like I do think that, real estate as an asset class could get tokenized, and, you could have these, REITs that are tokenized and combined, and because it's programmable, you can kind of do some cool strategies on top of it. In terms of like an individual house, right? And you're adding upgrades to the house, and that gets added to the NFT. It's like who's verifying that those upgrades are taking place, right? Like it's not like you have all these cameras in your house that are running in. You need a bunch of cameras that are running in like trusted execution environments so that they can't be tampered with, and have to be going into like some type of vision neural network that's like confirming that these things are taking place, and then like the NFT updates, right? Like there's some things that it's kind of infeasible to do. I do think that there are a lot of interesting RWA products that could get unlocked by tokenization, like tokenized carbon credits or like tokenizing energy consumption. And so like maybe you could, there'd be better and easier ways to like sell energy back to the grid and stuff. But I definitely do think that there are some things where it's like, we have a traditional legal system, and it works. It's slower, but for the fuzzy world we live in, it is better than one of a blockchain or smart contract or Oracle network based solution, right? Which once something executes, it's finalized. I do think that a lot of people will interact with this technology through traditional rails, right? So you might be buying crypto products through your just like Wells Fargo bank account, right? But in the back end, Wells Fargo is talking with CCIP and it's talking with these blockchains. And so the blockchain layer might get abstracted away from you. And in that case, you do have an intermediary to do stuff. Maybe some blockchain-based insurance solutions come up that help solve some of this stuff. But I think that there's definitely some use cases that I think are thrown around that might not inherently make sense to me.
Right. And, the hype around here is sort of led by Mr. Larry Fink himself, CEO of BlackRock, who has gone on the record that he wants to tokenize basically all of his assets, which is in the, it's a stupid high amount. So this isn't just, murmurings of some shadowy players. This is, one of the big players. Daniel, I want to switch the conversation a little bit to what I personally have experienced as the hardest thing about being a Chainlink investor, which is Luke and I talk about this all the time on our podcast, the difference between price and value. And Chainlink has been absolutely maddening for me because while the circus stuff, is going up hundreds of %, the degenerate gambling stuff is people are getting filthy rich. And the one project that I think of investing based on the most solid foundations of utility and real world facts and the good stuff that any serious investor looks at, the price until very recently has been despondingly awful. And that kind of divergence is sometimes maddening. I mean, I don't know what other word to think of. I've asked myself, am I crazy? Am I hallucinating all this? How could this be? Right? Can you, and I have a real world test case as a follow up to that, but can you speak to that a little bit from your own experience, this massive seeming, yeah.
So Chainlink, it peaked against Bitcoin and Ethereum in 2020, right, during what was called DeFi summer. So, Chainlink had ran up, 100x from the bear market lows. It hit $20, and from that point, it's kind of underperformed the market. Obviously, recently, it looks like we might be at a turning point. But I think that crypto, it's all about the hot new shiny thing. Right. And Chainlink was kind of this 2018 era, what the community calls dino coins, or what crypto Twitter calls dino coins. And, it's infrastructure. It's not sexy. As of now, you don't need to, if you want to go buy meme coins on Solana, you have to buy Sol, the asset, to then trade. Right. So Sol kind of gets that buy pressure. Currently, it's not you have to go buy Link to buy meme coins, right? And obviously a large, portion of the space is just speculation. I think, Chainlink has kind of hovered around the top 15 in market cap. And, it's still been it's hovered around this 5 to 10 billion market cap point. And I think if you look at the network KPIs, I think from, if you're looking at this from a more kind of intelligent investor, sophisticated investor, the valuation probably, was more in line with those KPIs. And so, maybe it didn't see that much buy pressure from, crypto funds, right? Obviously, it's not getting that retail buy pressure. And so I think the result of that is, it's outperformed Bitcoin at times, but it's mostly, relative to the hot projects, it's underperformed, right? I do think, I think it's notable this performance shift since Trump was elected, because if you think about it, right, a lot of the value proposition of Chainlink, it's tied into this technology becoming, legal and getting regulatory frameworks so that TradFi can adopt it. And interestingly, something like Solana has actually drastically underperformed since November 4th, since, the Trump election night. And so I think that, there might have been a game here of, all right, like obviously between 2021 and, January 1st, 2023, we're in a bear market. Everything got destroyed, right? But let's say from 2023 onwards, yeah, I mean, a lot of companies were still getting sued in the US. The FTX crash had drastic and kind of lasting implications. Like, I think DeFi, right, which relies on the regulatory framework, it was underbought and undervalued because, why would you buy that if it's not even legal, right? And so I think in an interesting way, the stuff that was just purely vaporware, purely speculative, did well because, yeah, I mean that's illegal anyways, right? So I think the regulatory shift is big, and I think that could possibly be the biggest explanation as to why it underperformed.
So one more test case to work through with you on that topic. I don't actually understand the technology well enough, Daniel, so maybe you could help me. But when I looked into XRP, that token, I believe, recently ran up to third on the totem pole, third or fourth, right? Valued at something like $140 billion. Everything I found about it suggests that it's closer to the world of the meme coin or an older technology that has a bunch of NDAs, meaning they can't ever disclose the partners they're working with, and it seems like just kind of trust us, right? But but in reality, it's valued 10 times as much as Chainlink is. So I'm sitting here reading all the stuff I can about Chainlink actually showing verifiably that they are working with the world's top financial institutions, being valued at 10x less than a kind of outdated meme-ish coin. How could that be? What am I, first question I ask myself is, what am I missing? How do you explain this gap at the current moment?
Yeah. So actually, and that was an example that I was maybe going to bring up. Yeah. I mean, I think it's well known that XRP is just vaporware. And I'm not just saying that, right? Like when they were getting sued by the SEC, their CEO founder literally said in the lawsuit that, like, he admitted, yeah, the token is worthless. The token is not used within our system. The token is not meant to generate any cash flows. It's like this pure, I mean, it's literally a scam, right? And I think that, I mean, it's proof that the market's not efficient, right? And George Soros's theory of reflexivity, his book, Alchemy of Finance, I mean, it's a great read. And I think when you talk about, fundamentals of markets, right, there are fundamental reasons why markets move in certain ways because of, human emotion, fear, greed. They can't be ignored, right? And it's not that those are inefficiencies, but I do think that, like, I look at that as much as I do, technological fundamentals to explain price movements. And yeah, I mean, I think that there are, like, people are easily, sold some story. And I think XRP is, it has this kind of cultish community. And it kind of caught this whole, regulatory narrative. They're no longer getting sued, blah, blah, blah. But if anything, that just shows how inefficient the markets are. And so I think that example actually shows that, like, yeah, like, price isn't in any way indicative of fundamentals over the short term, right? And it's not like Chainlink. I mean, 140 billion, that's a lot of money, right? I think OpenAI is valuations at like 160, right? So these aren't just like, we kind of get, used to seeing these valuations, but like the Chainlink, I think, is around like maybe 15 billion right now. Like that's a pretty high valuation. So I think in a weird way, crypto projects actually get penalized for being serious, because then they're more strictly valued on their cash flows, which we're still so early. You don't want to buy something that is trading at, 100x, whatever, valuation to cash flows multiple, right? So in a weird way, the serious companies kind of get negatively they kind of get this negatively impacted multiple. They're seen as dino coins, but I don't know. I think we're still so early. I always have a long-term view, and Chainlink is still kind of beating out Bitcoin at certain points, and that's kind of my index. And so, when you're comparing it to the hottest new thing on the block, it looks like it's underperformed, but I still think Chainlink's done pretty well if you compare it to something like the S&P 500, right?
Yeah, fantastic. Thank you. So I'm not crazy, right? Like it's just
I'll send you that. I'll send you that on Twitter. It's actually hilarious. Like there's literal written in a legal thing documentation, like the founder literally saying our token is meaningless. Don't sue us. Like
right.
It's actually quite funny.
But it is, I'll just repeat, it is crazy inducing and Luke and I talk about this all the time, unless you do the hard work of truly understanding what you own, the price action given to you by the market can make you think you're loopy in the head and just making shit up. But
yeah, Isaac Newton could be the smartest human ever, and he got absolutely destroyed in the Tulip bubble. So it's not something that, like, if you're smart, it's avoidable, right? Like I've gotten, destroyed by my emotions, right? It's hard to deal with. And look, some of my friend told me, like, Chainlink is either the future, it's either this big winner, or it's like the biggest scam ever. And if they are a scam, well, they're a really poorly run scam, because they barely used to do any marketing. They would barely do any hype videos or anything. Like, typically scams at least try to make people buy their tokens. Chainlink would do nothing. So if it is a scam, well, it's a pretty poorly run scam.
Right. Yeah, I love that. Right. That's right. No, just to our listeners, I do encourage anyone to go to Chainlink's official lab. And when you see the kinds of people involved on their team, including the advisory board, we're talking about, correct me if I'm wrong, Daniel, some of the seriously most well-established and brilliant people on the planet, including, this is an old selling point, the former CEO of Google has been their advisor for a long time. And that guy's just not going to play with, put his face to anything that's remotely, scamish. So just an FYI. Quick question for you, Daniel, about this is maybe the last area of like me not understanding some fundamentals regarding Chainlink is sort of the way the token itself functions. And I get this question a lot. Like, in theory, if you invest in Bitcoin, sort of even as, say, digital gold, meaning you think of it as a store of value, right now it's been like, oh, but it's going higher. So you're sort of also wanting it to go up and up and up, right? But if Chainlink sort of set up a mechanism where the token itself is the way that companies pay for the services, and then it gets, no matter what token you use, it gets converted to Link, then it stands to reason that the higher the token goes, the more companies would have to pay to use its services, which is a weird sort of not increase in cost of goods for, like, it almost seems self-defeating.
Utility decreases as price goes up. So
yeah, can you speak to that?
Yeah, I actually got this question from a friend recently, and so prices are going to be denominated in US dollars. So regardless of whatever the price of the token is, you're always going to be paying the same for various network services, right? It's just as the price of Link goes up, you'll need less and less Link to pay for services.
So is that question therefore moot? Can you quickly address the token not needed bear case that you hear all the time from people that refuse to believe that what Chainlink is building as a tech company has anything to do with the coin itself?
Yeah, so I think, and I actually think the token, to not get like too in depth, right? These protocols, like, they can create their own form of money, right? Which I think is super, super valuable. In terms of the token not needed thing, Chainlink is following a trajectory or a strategy of a lot of other kind of prominent or like successful tech startups, where at the beginning, their goal isn't to make as much money as possible. It's to grow as large as possible and become as integrated into as many services as possible, right, before they start asking for fees, right? And so if you look at like a company like Uber, right, like they followed a very similar strategy. And, you mentioned Eric Schmidt, he has a quote in one of his fireside chats with Chainlink where he says, you give me a billion users and I'll find a way to make money from them, right? And so Chainlink's strategy has just been, let's grow as big as possible. Let's get it integrated to as many services and blockchains and applications as possible. And then, we can quote unquote, turn on the fee switch later. Mechanically, right now, right, because the network is, it's very highly used for price feeds, but price feeds don't necessarily generate a lot of money. And so a lot of Chainlink's revenue is actually coming from partnerships and off-chain agreements, where they're actually building out a lot of infrastructure for various blockchains. I have done some research on this, and I put it at an estimate. I put them, making around maybe $10 to $20 million a month from these type of private partnerships. Obviously, this is just like pure speculation and taking what publicly available data I have. That would put them at making a lot more money than it seems they're making, right? And currently, Chainlink is taking those profits and they're paying the node operators of their network, right, through their personal treasury, which obviously all that's private and that's obfuscated right now as well, right? So it's really hard to get a grasp on all that. But I think, right, this is actually the intelligent way to go about it because they're maintaining as much control over their network growth in the short term as possible. What the future state will look like is as the network really goes live on, TradFi and really starts to grow and accelerate and gets completely opened up, because currently the node operator set is actually a permission set. You have to apply to be a Chainlink node operator. It's not like anyone can just come in and, start doing it. Once that goes live, right, you're going to see that kind of feedback loop of all network services have to be paid for in Link. Those payments filter directly to node operators. Those node operators have to accumulate Link and stake it to get access to jobs to earn fees, right? And so, once they kind of get this rolling, you actually start to see a flywheel effect where on the supply side, node operators have to accumulate large amounts of Link to get access to cash flows. On the demand side, you have to buy Link to pay for network services. They're actually creating something called a payment abstraction layer where you can pay in anything, and then they'll convert it to Link for you, right? Which creates that buy pressure, which is what we want. And so once all that's, kind of gets built out and goes live, I think the token not needed talk is going to disappear very, very quickly. But it's something that I'm not really concerned about at all right now. It is part of like something that would invalidate my thesis in, let's say, the next 1 to 3 years. If like a lot of stuff starts to go live and, they're still obfuscating a lot of this information, this data, then it's like, what's happening? But I assign such a low probability to that. I think that it's mostly just like, let's prioritize growth right now.
Awesome. Thank you, Daniel.
So maybe, Christoph, we haven't answered the big question. So let's say a listener has listened to a very long 90-minute conversation with Daniel, and thank you for being so generous with your time, Daniel. And let's say they're excited now about becoming a beneficiary of this growing ecosystem. So Chainlink, the company, I guess Chainlink Labs is a private company, so pretty hard to become an investor there. How would a listener get involved with Chainlink if they wanted to?
Yeah, so I would probably just make an account at an exchange like a Coinbase or a Kraken or a Binance or whatever jurisdiction you're in, whatever you have access to, and it's really just buy the token right now. There are some ways to stake it, but it's still relatively newer. Chainlink's native staking, I believe, is full. So really, it would just be buying the token as a speculative instrument, and in the future, right, you could stake it and earn a share in network cash flows, right? Or like, lend it to someone who stakes it for you. And
as an important principle here, I have to say that first rule of crypto is not your key, not your crypto. So I myself have my chain links all staked with Chainlink Labs, but even if I didn't, there's some portion that I hold on a hard wallet for precisely the reason crypto was invented, that any exchange could just disappear and then you're left with zero recourse. So FYI, I think the simplest path would be for me today, if I'm a beginner and I'm starting, I go to Coinbase. That's the big daddy of them all. Chainlink, in fact, just announced another integration with them themselves. So that's yay, Chainlink, right? You buy some Link tokens on Coinbase, very easy to do. User interface is not much different from buying anything else really on any other brokerage, and then transfer that token onto a hard wallet. Look up any YouTube video for Square has some, and Ledger has hard wallets, and you just go step by step, and go slow, and then your crypto will live safely. That's what I would advise.
Yeah, and also, at this point too, right? Like Coinbase is custodying BlackRock's Bitcoin for their ETF. Like I think Coinbase is they're not an FTX, right? Like I do think they're secure, and for like a small amount of Chainlink, like I think for the average person, I think keeping it on Coinbase is fine, right? As long as you have phone app based two-factor authentication, I think that that is a fine solution as well. But obviously, a hardware wallet would be the highest security option. But I wouldn't trust any other exchange other than Coinbase.
But I feel like because we have this in the disclaimer at the end of the episode, but I feel like I want to say it for real now. Do your own due diligence. Don't take anything any of the three of us said about XRP or Chainlink as gospel. Right? Go do your own work and make your own decision. Christoph is seemingly way overexposed to this stuff. Hopefully, he's heard a bit of honest truth from Daniel, and maybe I'm thinking I should probably increase my position a little bit.
Let me speak to that point, Daniel, and walk me off the ledge here. In hindsight, when I got interested in Chainlink, that was when it was still mostly speculative in the literal sense. There were promises of that Chainlink would accomplish X, Y, or Z, right? And I built out the majority of my position during the lows around $5 to $7 of the last couple of years, right? But that was still me speculating mostly, right? Versus, to me, what happened in the last, call it 6 months, the amount of partnerships that have been publicly announced by the biggest names in finance have, to my mind, drastically shifted the call. I don't know, I think of it as a risk reward ratio, that the risk is still obviously high because of the reasons you mentioned. Anything could happen, but the probabilities of this project actually somehow squandering this massive lead they have now are as low as they've ever been. So that doesn't mean the risk is zero again, but I feel more confident than I've ever been ever now today, as the price is starting to actually go up, and the proof is now more as visible as it's ever been. Can you address that? Can you put on the investor's hat for a second and kind of talk us through your own sort of approach to investing in Chainlink? How are you, yeah.
Yeah, I agree. Like I absolutely agree. I think last cycle, I essentially just held my tokens. I'm a long-term investor. I'm going to hold up. I'm going to hold down, whatever. But when prices drop, 90% over like a 18-month period, like it's hard to deal with that. I do think we are on the upswing at the tail end of the cycle now, and that's when 80% of the gains can be made in a couple months here, right? With Chainlink, I do get more bullish every day. Like the fundamentals, as you just said, they only keep getting better. And so right at a point like this, you're like, oh, like this is when I have the most confidence, right? And then price moves, And right, price is everyone's signal, right? So people actually want to buy more at higher prices, and they actually want to sell at lower prices, right? People don't buy low, sell high. They actually sell low and they buy high. It's, Chainlink or crypto generally moves in these cycles. And, Bitcoin is now in price discovery. It's teasing with 100K. I've written a cycle thesis at my website, abstraction.capital, and that might be a good read. Typically, the cycle peaks 12 to 18 months after the halving, which would put us April to, like mid-April to mid-October of 2025. And that's also next year is when we're probably most likely to see the largest moves from something like Chainlink, right? That's actually a time to sell, though, at least some of your position and take some profits because, I as well get so excited about Chainlink, but I feel like I don't want to make that same mistake again of never realizing profits. And trust me, I plan on buying all that exposure back probably sometime in 2026. But something I have written on a note, just put right there on my desk is like sell in 2025, buy in 2026. And so even as the fundamentals get better, the CEO, Sergey Nazarov, has stated 2025 year, we're going to start seeing stuff in production, but it's going to be small scale. 2026, all these, large firms are probably going to do referendums. How did all this stuff go, right? And then he thinks it's really going to accelerate into 2027. And so as excited as I get, I'm going to try to control my FOMO. And even as fundamentals improve, right? The weight of Bitcoin dropping and the entire crypto market cycle ending, not even Chainlink, not even something with strong fundamentals is going to survive that. And yeah, even if you sell, half, 50% down, if the asset goes down 90%, you can buy back 5x your exposure. And so, you can always buy back higher too. So I think, as fundamentals get better, I'm more confident than ever. I think it's going to be a great 2025, but that's also the time I think to take some profits. But in terms of like by 2030, a meme in the Chainlink community is $1,000 EOY, and I don't think something like that is crazy on a 5+ year time horizon. To be honest, it's just getting there. It's probably gonna be volatile, and so yeah. And then also there's the other risk, right? So yeah, if you're a new investor, just my advice would be, don't feel the FOMO. If you buy right now in December or in January of 2025, like the cycle's probably going to peak in 2025. So make sure you at least sell and retrieve your principal if you achieve that.
Yeah, that's really sage. And it does get into the complexities of market timing. And Luke and I talk about this all the time. My worst investing mistakes by far have been selling, trying to market time, and then the complexity of getting back in. That mistake compounds. But there's ways around it, and there's ways of managing that. And that's not for this conversation. So thank you so much for your really, what feels to me, grounded, level-headed, objective approach, Daniel. Like, it was really, really, really welcome.
I was saying that's what's tough about crypto, right? Like it moves in these bubbles, and yeah, like I think it's just easy to say, all right, I'm a long-term holder, I'm going to buy and hold, but at the same time, because it is so volatile, it's tough to balance that long-term holder kind of strategy, which I think is probably the best strategy, with also, I think it's good to take some profits along the way.
Great stuff. So, Daniel, you mentioned Abstraction Capital there. Is that a great place for our listeners to come and find you if they want to read more about you and see more of your work?
Yes. And I'd say also my Twitter. So @_DShap, DSHAP. Always tweeting there and have a lot of good stuff coming as well. So yeah, definitely check me out.
Man, it's been a real pleasure speaking with you this morning, Daniel. Thank you again so much for taking such a huge chunk of your Friday morning to be with us. Your knowledge is obviously really grounded, and really excited to following this journey, to be on this journey with you. Can't thank you enough.
Yeah, no, thanks for having me on. Yeah, this was a lot of fun.
Great connecting, Daniel. Thank you.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.